think we'll kick off then. Hi guys, welcome. And today we're going to talk about strategy and how to improve it.
Okay, let's go.
It's end of September. August and September are usually historically just tough months. So if you've had a tough couple of months trading, you're not alone. A lot of traders, this is our toughest time of the year often. I was just looking at the charts this morning. Obviously, there have been a few really good things. So gold's been on a massive rampage. And if you got on the longs for that, well done. And, there's a few stocks. My Tesla stocks are finally moving. There's been a few good things. And that's, I think, why we always trade August and September. I often think, should I just sit it out? And then I give it a bit of a try. But it's tough. And this morning I had another stop loss hit. I've got 2 open trades running, but I've had a stop loss hit this morning and one yesterday. And it's just, markets are just ranging, and ranges can be very tough, and it's kind of been a bit of an extended period. So it's a tough time, and if you are having a tough time, you're not alone. It's very normal for us. So what I'm doing in my trading, and I usually do it this time of year, is I'm looking at my strategy, and I'm not changing my strategy, but I'm improving it. So I thought, why not share what I'm doing at the moment today? And so I think it's a good time to look at how to improve your strategy. So I'm going to look at 3 things that you can do to improve your strategy. And we're going to look at the one mistake that traders make. I see this way too often, and you really do need to avoid this mistake. So we're going to go through that at the end. So let's kick off on how you can actually improve your strategy, because this is the time to, and it's really important to not throw the baby out with the bathwater here. So when we've had a bit of a tough run, we can sometimes feel like we need a new strategy, that the strategy is not working. But there are just times of the year, like August and September, are just bad times. The markets will, and whatever you're trading, it will have periods when it just doesn't really suit your strategy that well. These don't last long, especially ranges, when market makers are really kind of setting up the next leg. It can range because the big players are taking orders. They haven't finished placing all their orders, so they kind of keep it in a range so that they can fill all their orders before price moves in whatever direction it's going to move in. And, when I first started, I wouldn't say started trading, because I'd on and off traded for many years, not very successfully, but I'd been doing kind of some short-term scalping trading and some kind of more long-term investing. Some of it was successful, a lot of it was not successful. But when I kind of made the decision to become a trader, I was doing some coaching. I'd been practicing my strategy, doing demo trading, and I got my first challenge account, and I opened it at the start of August. And I just didn't realize that August is just such a dud month. And of course, nothing went right, and nothing that had worked in demo trading, nothing that had worked in all my back testing, nothing worked. And by the end of August, I had blown my first account. Now, what happens in August is that the big places, the big financial centers, New York, London, I'm not too familiar with, I think Asia as well, but London and New York are the largest centers. They kind of drive price more. But their traders are on holiday. August, London is like just dead. Everyone goes away. And it affects the markets are always unique. Every event is a snowflake event because of the makeup of the players in the market. Now, when a huge chunk of those players are away on holiday, maybe they've got someone babysitting their desk, I don't know, but no one's going to be taking making big decisions when you're on holiday. When I worked in the investment banks in London, August was a great month because it was so incredibly quiet. I loved working in August because it's like working, but you're basically on holiday because it was so quiet. And when half the players, half the people acting in the market are not there, you're going to get a different kind of events or different patterns in the markets. So sometimes you do get runners, fine, but sometimes you also don't. So it is a tough month, just accept it, and it will never change. And it's up to you long term if you decide to keep trading through August. September's a bit of a, but the shift starts, but it's not historically a great month either. So you need to decide. I always think, oh, next year I'll take August off, and then I kind of always attempt to trade through it. And it's never with great results. But you know what is a great result? Is ending this period with your account still intact. So maybe it's taken a little bit of damage, you've had a few losses. My account is kind of break even over this period. I've still had a couple of winners, but the losses have undone that, and I'm break even. So it's, as long as you're there to play another day, it's actually a good result. So let's get started on how to improve your strategy. Now, what I wanted to say about this is it's really important that you're just going to improve your strategy. Don't start a new strategy. Don't throw your strategy out because you've had a bit of a rough patch, okay? Jumping from strategy to strategy keeps you in just a cycle. You're never going to get ahead. You need to kind of stick with what you've got and improve it. I like to also call it optimization of your current strategy. After numerous cycles of optimization, the end result might be completely different, but you want to make these incremental changes. You don't want to keep throwing your strategy out and then starting new. It's not a good habit to get into, and it's really just going to keep you churning your wheels because you never get ahead. Okay. So sorry, I just want to open my computer here because I want to have the charts there. Okay. First thing, how to improve your strategy. Three ways. Okay. So first thing is consider adding a higher time frame view over your strategy. So whatever you're trading now, if you're trading the 1 hour, consider looking at the daily. If you're trading the 5 minute, consider the 1 hour. Even the daily would be really helpful. Kind of go up. The daily is a great high time frame to look at if you're trading below that. If you're trading on the daily, look at the 3-day or even the weekly. But what a higher time frame can give you, you don't have to put your strategy on the higher time frame, but look at the higher time frame and look at the trends, what's happening on that higher time frame. Because if you can, on your lower time frame, trade in the direction of the higher time frame trend, what's going to happen is that when you hit these rough patches, so these ranges where it's kind of fake breakouts and they keep tricking you into, okay, trade here and then it just returns to the range, you're only going to get wicked out one way. If you're only trading longs, you're only losing on those long trades that kind of keep getting wicked out, and often they don't get wicked out. In a range, the predominant trend will actually stay intact because those ranges are actually forming higher lows as it goes up. So you can kind of keep those trades open. And the important thing here is that you're already trading your strategy according to your back testing. So you know that you can kind of take however many losses it takes to get through a range. But psychologically, it's really good for you to reduce the number of losses in those ranges. Okay, even though your strategy, the profitability of your strategy can survive those losses, psychologically it can be really bad for you if you're trading both ways and you're getting wicked out both ways, and you can sustain a lot of losses in a quick amount of time and can really affect your doubt, your certainty about your strategy, and you can start on a downward spiral. So it's kind of one is to protect your P&L, right? But even if you can sustain those losses through kind of big trades when they come, psychologically it can affect you. So you need to make the decision about, are you taking too many losses? Is it affecting you? Because this is a great way to avoid losses, or at least avoid half the losses when you hit those tough ranging periods. Okay, so consider a higher time frame. It's really, really helpful to just reduce the number of losses that you have. Okay. So the second way to improve your strategy is to consider looking at what's happening before your entry. So often we get so fixated on our entry arrives, and we're so fixated on where's the entry, where's the stop loss, how am I trading this one, and then either it will work, it won't work. But have a look at your strategy and look at what's gone before that setup. So there's two things that I really like is that before a great trade, often liquidity has actually been taken out. And this could have happened a day before, an hour before, or 2 days before. And it might be out of sight. You might not see it because you're fixated on your entry, but kind of zoom out and just look at what has happened before your entry setup. And are there patterns? If you look through your back testing, are there patterns where certain events like grabbing liquidity, or another one is looking at the 200 MA. I really like the 200 MA on the 1 hour. The way it reacts off that MA can often set up great trades for me. And if you look at what happens before, you can start seeing patterns that certain events often lead to losses and certain events lead to your really good trades. And it means that you can start to maybe trade more of the good trades and reduce the ones where it's a little bit more iffy because the market is still kind of grabbing liquidity, grabbing orders, and it hasn't finished. And when it has, the setup looks quite different. Often liquidity will be grabbed, but the second thing is that the 1 hour to 200 moving average has been reclaimed, whether that's long or that's short. Once it reclaims that 200 MA, can often be really good for continuation of that trade, and it can kind of indicate that your trades could run better. So the second one, looking at what's gone before, can be a good way to trade more of the good stuff and possibly also reducing the losses, which is great for your P&L, but also for your psychology. It's really important, until you get to the point where you're not bothered by losses at all. It's really helpful to find things in your strategy to help optimize your strategy so that you can trade more of the winners and just reduce your losses slightly. Okay. The third way, let me just check that we're still good on sound and great. Okay. The third way to improve your strategy, and I see this with way too many traders, and if you're doing this, it's a really nice, easy, it seems obvious in hindsight, but you might not be doing this yet, is to spend some time looking at what targets are you setting, and set those targets when you enter the trade. I think we spend too much time and focus on getting a good entry. Obviously, without an entry, you've got nothing. But the entry and then the stop loss is the main focus. And we often forget about the targets because we think, oh, well, when this starts to run, then I'll look at the targets. It might not even run, and then it's a waste of time. But you should be as clear and spend as much time at the point of entry planning and setting exactly what your targets will be. How will you be getting out of this trade? Because leaving it to, well, I might trail it, I'll see how it goes, I'll see how it reacts, or the MAs, or whatever your plan is, anything that's I'll see, or I'll just kind of slowly follow it up, it's not clear enough. Slowly follow it up can mean different things in different environments. If something goes, if you have a huge candle, how do you slowly follow that up? If it kind of goes over days, when do you move it to where? Like, it's got to be really, really specific, something that isn't open to interpretation. So your target shouldn't be that if you kind of read your rules for your targets and I read your rules for your targets, that we would interpret it differently. It should be really clear. So at 500 pips or whatever it is, 2% move, I will take 50% off. Or if it closes, if two candles close below the 20 MA, I'm out. it's got to be like data driven, like really, really clear, really specific. And your targets should be set before you enter the trade, because a lot of us spend a lot of time and effort getting into those trades. You've done all the work, and then we're losing out and actually taking the profits or taking them in a consistent way, because one trade might just run straight to your target, and the next, so you kind of can trail it up really tight, and the next trade, as soon as you move to break even, you're out at break even, and then it runs. So it's, you can't leave it open to interpretation. You've got to do the same thing each time, and you can't keep changing and swapping and changing. So spend a bit of time on your targets. What are they? What is your exit strategy? It should be as detailed as your entry strategy. And I think it's something we often leave. We often just leave it. I left it for a long time. I used to just be like, well, when it gets to something nice, I'll just take it. And I've run a lot of trades to nice profits and straight back to losses, because nice makes no sense when you're in the moment of trading, right? Okay. So now we're going to get to the thing to avoid, and you have to avoid this, and far too many people do this. In fact, I think it's a big reason for the 95% failure rate in trading. But you cannot improve or make changes to your strategy in live trading. Don't use live trading as your testing ground. You have to this is a lot of work. There's a lot of work here, okay? If you want cheats and kind of someone to tell you that trading's easy and not going to be any work, I'm not the right person to talk to, okay? You've got to do the work. This is work. So optimizing and improving your strategy in this way is more work. But if you don't do it this way, you're going to be stuck in failure, because you cannot be changing, improving, making any changes to your strategy during live trading. Okay. So how we're going to do this is we call it, and I've got processes for everything. I'm like, you need a strategy and you need processes, routines for how you trade, how you do back testing. And this is the routine and the process for how to optimize and improve your strategy. Okay. So we've talked about the technical things you can look at. This is the practical how to actually do that. So we're going to call this the optimization process. And what you need to do is, while you're trading, while you're doing live trading, those things you are tempted to change or improve during live trading. So should I run my stop loss? Should I trail my stop loss? Okay, that's a question. So you get a book or a piece of paper or something and put a title, questions or improvements, question/improvements. And there goes the first one. Should I trail my stop loss? And maybe you've got an idea that it seems like the 1 hour 20 MA is a good way to do it. So write up whatever it is. And as you're trading, you're just filling out anything that comes to mind that's not clear in your strategy and your rules already. You're just going to add to this piece of paper. And what I do is once a quarter, I do my optimization process, and I'm in the process of doing it now. Last week, this is all I worked on. I've been pretty quiet on, YouTube and social media, because I've been so busy doing my optimization, and I need to do this every quarter for my strategy. Once a quarter, or whatever you decide to do, but it is a chunk of work. So you don't want to do it too often, to be honest. Once a quarter, you pick up this piece of paper that you've been filling out for the last 3 months, and you do your optimization process. So you go through each question, and maybe you've already solved it, because as you've been trading that idea on another day, you went, actually, this trailing wouldn't work, so I've already decided it's not relevant. Just cross that one out. Look at the next question. Anything that you've still got an open question, or you've got an idea for improvement, you go and you do your analysis, test a few trades, and once you've kind of decided, I think I should do that, write up what the rules should be. And then here's the big piece of work. You've got to go back to your back testing. Your back testing supports your strategy. It supports your, is this a profitable strategy? Is it worth trading this strategy? Are you going to get profits at the end of trading this for a year, right? You've got to go back to your back testing and you've got to redo your back testing with that new rule in place, because it could drastically change your results. And sometimes something looks like, oh, this would give me more profits. For example, trailing a stop loss. It looks like this could give me more profits. But when you run it through your back testing, you find that some of the best trades, it doesn't work, because by trailing that trade, you would have been taken out at break even or at 1 RR instead of 8 RR. And suddenly your profits start to dwindle because it worked on one trade, but then there's 4 other trades it didn't work on. So you've got to then look at your back testing results with these new rules in place and go, is it worth having that new rule? This takes a lot of work, and the longer you trade, the less you really make changes to your strategy. I make very few changes, but doing this work is still a lot of work, and these are worthwhile changes to make. They've got to be worthwhile. So you've got to run this system as it's an actual process that you've got to run independently. It's an activity, and you can still trade your old strategy live while you're doing this, but it's not until you finish your back testing that you put your new updated strategy live, and then you trade that. And you owe it to yourself to do things like this. I know it seems like a lot of work, but you're running a business. You need to do things properly. You can't just, update and change things as you go, because you're starting to get into the world of just taking a punt. You're starting to behave like a degenerate gambler if you're doing that, okay? You need process and to do this in a very orderly way. Now, will you ever just not want to change your strategy? Well, here's the thing, is if you look at all the options, I had this question for a long time. I was like, is there something wrong with me that I can now stick to a strategy, but I constantly had this feeling of wanting to make changes, wanting to improve it, feeling like there was something more, even though it was profitable. It's normal to want to improve things, because if you look at all the options we have, all the things we could trade, all the indicators we could use, all the time frames, all the combinations, all the choices we have, there's about, I think somebody did the maths, and there's about 1 billion combinations. Now, you're like a child in a sweetie store, right? Where there's so much to choose from, and you keep thinking, is something better than what I've got? Is there something better? That's just human nature, okay? We're humans at the end of the day. Let's lean into it. So to just not ever change it. Yes, I think eventually all these urges that we have, eventually, if you went into a sweetie store all the time as a child, you were always tempted to eat sweets. But now you go to the store, are you as tempted to always grab sweets? I certainly am not. I know some people have a sweet addiction, so that's a thing. But, children have tantrums in supermarkets when their parents won't buy them sweets or chocolates. Adults don't. So things just do diminish over time. The urge and the desire, and that, if you can't do it, then, you're upset. It does diminish over time. And it's the same with trading. So over time, you will actually just be like, I'm just so happy with my strategy. I know there's 1 billion other strategies I could trade that could work. I know there's 10 ways to improve the strategy, but it works. It gives me profits. It's great. And you'll settle down, okay? But until then, you will have this urge, and it's far better to have a process, a set, reliable process where you can, put down all these questions you have. You're not going to lose them, but it means that you won't then, it should help with the urge to make changes in live trading. And you have to protect your live trading environment. You have to protect yourself while you are trading, and you have to protect any urges that you're going to have. And doing this process by putting these questions down, it helps you to put that urge of wanting to improve somewhere. It's very normal to have that urge, so just accept it. And once a quarter, you can do all this work and you can get the improvements. Now, after you've done it a few times, you're probably going to want to do it less and less and less, because you realize how much work it is to improve your strategy if you do it properly. But it's also nice. I actually, after a couple of months like August and September, I've really enjoyed the process, because there are there's not many changes I'm making, but there's a couple of improvements that I really want to just know, is this going to make my strategy better or not? And I'm halfway through the back testing, and it actually has. I'm really pleased with the changes I've decided to make. I haven't finished my back testing yet, so I've been doing it for a week, and it's been a lot of work. It's been a lot of hours. It'll probably take me another week, I think, to finish. So it's about a 2-week process for me. And the longer your back testing is, the more data you have to support your back testing, the more work this is. But you have to do it this way, because I really hope that you realize the danger of making changes and improvements in your live trading. It's a bit of a slippery slope, right? So I'm going to end the stream here. Got a bit of a slow bit rate. I hope the stream's been okay. And I hope you implement this. I hope you accept the challenge if you are wanting to make changes. It's also okay to not change your strategy. It's okay to just stick with the one you have and not improve it. The main thing is to improve and optimize your strategy if you want to. Don't wholesale throw your strategy out each time you have a little bit of a rough run. That's really the takeaway here, okay? Don't throw your strategy out. Rather optimize it, rather improve it with this process. And if you can avoid this process and stick with the profitable strategy you have, even though you've had a bit of a rough run, it's even better. I look forward to the day that I actually am okay to not do this process, because I'm just so settled and okay with the strategy I have. I'm probably like 90% there. I only do this once a quarter, and I'll be honest, last quarter I did miss it because I just didn't get time for it. So I'm kind of doing 2 quarters worth of questions this time. It's not something you have to do every quarter. It's not something you have to do every year. Like, you can do it whenever you want to, but this is a process to use to do that improvement and that optimization. So yeah, again, let me know in the comments if you do this and if it works for you, or if you've got certain things that really help you to kind of weed out, like get rid of some losses, because knowing when not to trade is as important as knowing when to trade. So anything that can reduce your losses, how to identify periods when your strategy isn't going to work so well so you can trade a bit less. All of these things are great, rather than hitting a patchy path and saying, oh, my strategy doesn't work. Yeah, every strategy doesn't work all the time, but those patchy bits also end. Okay, so yeah, stick to your strategy. Don't go and keep changing your strategy. It's going to really make a big difference in you becoming profitable. I've made a guide on this process, so it's a step-by-step guide on how to optimize your strategy. If you'd like that, leave me a comment in the comment section. Let me know that you'd like that, and I'll send you a link to it.